Hi, this is Chris with Home Garden Mortgages, and the number one question we get, besides what's the base rate, is where are mortgage rates going? And I'm going to try to break this up into a bunch of small, short videos. And let's start with today's theme. It is President Trump going after the chairman of the Federal Reserve, Chairman Powell, to reduce rates, while Chairman Powell essentially sticks to his guns, citing inflation and tariffs and refusing to reduce rates. Now, the whole backdrop of this is we're going to share the screen with what Goldman Sachs has come out and said. They're expecting around 3 rate cuts this year. 3 rate cuts of 0.25 or 25 bips. We're expecting in the ballpark of 3/4 of a point to a point, which if that happens, you're going to see rates fall, pretty significantly in the short run. But coming back to the earlier theme of why rather, Trump goes after Powell is essentially because it works. We're going to show you a video from Steve Leisman of CNBC, pretty much citing the 10 or 11 times that Trump has gone after Powell on social media, verbally calling him a bunch of names. Rates have actually fallen. And the one thing we know about this president is if it works, he's just going to keep on doubling that up until he gets what he wants. Here's the video.
But June was a month of historic, intense bullying by the president of the Fed chair to cut rates, and bond yields fell sharply. So is it working? CNBC counted 10 times, maybe there's 11, when the president, in ever-growing stridency, criticized the Fed in tweets, press conferences, and TV interviews. Take a look at the graphic here. On the 4th of June, he said, too late, Powell must now lower the rate. On the 7th, he said Powell is a stupid and bad person. On the 24th, we'll be paying for his incompetence for many years, and there's others up there on the screen if you're driving by radio. Well, a research paper by Francesco Bianchi from Johns Hopkins, along with 2 other economists, found that Trump's first-term tweets, quote, had a large impact on U.S. Treasury futures for medium to long-term maturities, and the effects increased with the horizon of the interest rate. They found Trump's comments moved Fed funds futures lower by 2.6 basis points. Only 5 of 50 macroeconomic events they studied, had bigger impacts than the tweets. Most sensationally, they concluded that the tweets helped partly explain the Fed's reversal in 2019 when it cut rates, which Fed officials, of course, have denied. But casting doubt on the theory, there were other events that moved yields in June. Take a look. A weak ADP report on the 4th sent them lower. They rose after strong payrolls on the 6th. They fell again after good inflation and after Iran hostilities ended. And, of course, Powell's testimony as well. Strategist Peter Bookvard told me, we go through days where the bond market trades on deficits, the weaker dollar, and weaker growth, moving in different directions on each one. Now, Professor Bianchi tells me it may be that the effect is less pronounced in this term because inflation is higher and you have those higher deficits and tariffs, which makes this really a bond counter rally.
We put all our rates out on a daily basis on social media. You can check out the website. Link should be somewhere below, which has got all our daily rates. There's no information, no personal information needed, right? It takes around 30 seconds to get a rate, and shop around for the best rate. Thank you.